Bitcoin is showing extreme volatility right now. Market makers are shaking out retail traders in the most brutal way possible. At this point, we all wish the market would just break out clearly in one direction, up or down. But have you noticed, the more aggressive the shakeout becomes, the closer we get to a major turning point that we absolutely cannot afford to miss. In today's video, we'll take a deep look at this crucial inflection point in Bitcoin's price and talk about how we can survive and position ourselves wisely in this kind of market. Watch until the end. This analysis will help you make the right choices when it matters most. What's good, guys? It's JC here. Right now, Bitcoin is showing extreme volatility. High leverage traders are getting wiped out both ways, and market makers are moving viciously to make sure no one can tell which direction comes next. But moments like this are when we need to stay calm the most. Put greed aside, stay patient until the levels we're waiting for come to us, and when they do, gotta have the courage to take the opportunity decisively. So today, let's analyze this market with logic and composure and break down how we can respond wisely to keep our portfolios moving upward. Before we get started, if you like today's topic, hit like and subscribe. It really helps me keep creating this kind of content. So to clearly understand today's outlook, we first need to briefly revisit the perspective I shared in my last video on Sunday. In a bull market, gold's rally often signals Bitcoin's next move upwards, but with BlackRock and ETFs showing steady selling pressure, and Bitcoin closing below the 200-day moving average, the overall situation remains uncertain. At this stage, I prefer spot exposure or very low leverage over anything above 3x. If the bull trend resumes, I'll consider new leverage entries once Bitcoin reclaims and holds above the 200-day moving average. If price drops further, I'll look to buy around 103 to 101k first with the support of 50-week moving average, and then again near 96 to 94 with the support of this long-term trend line. So that was a quick recap of my previous outlook. Now the question is, what's my current view on the market? To get straight to the point, I believe we are standing at a major turning point in the Bitcoin market, and my outlook is bullish. Let's not waste time. I'll break down the 3 key reasons behind this view one by one. So the first reason is reclaiming the 200-day moving average and the MACD golden cross. As mentioned in my previous video, the 200-day moving average reflects long-term investor sentiment. To simply put, when price is above the 200-day moving average, it signals an uptrend, and when it's below, it suggests a downtrend. On Wednesday, Bitcoin briefly dipped below this 200-day moving average, but quickly climbed back and now staying above it. This quick recovery alone is positive, but what makes it even more convincing is the MACD golden cross. MACD golden cross occurs when the short-term MACD line, the green line here, crosses above this red line, which is the long-term signal line from below. This crossover often indicates the potential beginning of a short-term upward move. The second reason is the retest of the trend line and the supply zone. The recent short-term rebound to 114k level was actually a key resistance area, and this zone aligns perfectly with the trend line that started from the 126k top, where Bitcoin faced resistance 4 times before. And for quite a long period, for more than 2 weeks, price couldn't even get close to that line. The fact that it has now revisited it suggests that in near future breakout attempts, the probability of a successful move will be higher. Zooming into the Bitcoin 1-hour chart, this area has acted repeatedly as both support and resistance, forming clear supply zone. Many traders likely shorted from that zone, expecting resistance based on both the trend line and the supply zone. And once again, as price approaches this area, short positions will start stacking up. But the more obvious and crowded those shorts become, the lower the chance that market makers will give them a clean correction. And the third and final reason is the 49k low fractal pattern. The current structure looks strikingly similar to the fractal from the 49k bottom formed in August last year. So now let's take a look at the 49k fractal first. After a sharp drop from the top, Bitcoin formed a new low at 49k, triggering massive liquidations in leverage positions. Then came a strong rebound, followed by a head and shoulders pattern, and finally a drop down to 0.786 Fibonacci retracement level before a new rally began. Now, if we look at the current chart with the pattern in mind, the similarities are clear. We had a steep decline from the top, forming a new low around 101K, again accompanied by heavy liquidations in leverage trades, then a solid rebound and the formation of head and shoulders pattern, then another pullback to the 0.786 retracement zone, exactly like before, and is now in the process of rebounding again. Yes, so this fractal resemblance to the 49K bottom is something worth paying close attention to. If momentum expands and Bitcoin breaks through both the downtrend line and the supply zone mentioned in the second point, then it would also push above the 120-day moving average on the daily chart, which would strengthen the bullish momentum even further. In that case, the upside target I've mentioned before, around 119 to 121K, comes back into play. However, since there's noticeable liquidity built up between 116 to 117K, more conservative traders might consider taking partial profits around that area. It all comes down to your own risk tolerance and trading style, so it's just according to what fits you best. So nobody can say for sure whether the bull market is over or not. However, if the goal is to make money, especially long term, the foundation of every strategy should still be built on a bullish outlook. That said, we can't take reckless leverage positions in such unstable market. Risk management is essential. The plan is always simple and tight. If price continues upward, which means the momentum is strong, look for long opportunities in futures, focusing on setups with the favorable risk to reward ratio. Or if price corrects down to the levels we've been waiting for, shift to spot entries or use very low leverage. Lastly, if you want to trade with me on one of the biggest exchanges in the world, BitGet or Bybit, make sure to use the link in the pinned comment. My code JC777 will be automatically applied. I have partnered directly with exchanges to offer exclusive fee benefits, 50% on BitGet and 20% on Bybit. Some of my subscribers, including myself, are already taking advantage of these benefits. I'm sure it's a deal you won't easily find elsewhere, so if you want to reduce your trading fees, make sure to check it out. It's definitely worth it. Okay, 10-second recap of today's video. Reclaim of the 200-day moving average and the MACD golden cross. Retest of the downtrend line and the supply zone, and a fractal pattern almost identical to the 49K bottom. Based on these signals, my outlook is bullish. Thanks for watching, and likes and subs are pure love, and I'll see you in the next one. Let's go make some money. Peace.